All right, good morning, everyone. Let's kick it off. All right, last night's session in, there we go, okay. Last night's session in the States was just absolutely spectacular. Just follow through as well from London session. So huge move in Europe yesterday. We saw about 3% on average across the board of the indexes, really just powering everything, full full risk on in terms of the equity side. What's I think really interesting to me about this whole move is that we saw a lot of this go. Some of the risk assets and risk currencies didn't seem to really run in tandem with the market yesterday, and that makes me a little bit nervous. You didn't see a punch through, from things like the yen. I know there was some dollar weakness yesterday, but you didn't see a punch through from the yen. Yeah, you didn't see a real move in the oil price. You didn't see certain things that you may have expected to see with a real strong rally of that magnitude. So, I'm I'm slightly skeptical to an extent because of all of that, but I think it's going to be interesting to see if if the markets are going to give us any follow through, or if we're going to see the same sort of thing in this that we've seen over the last month, and with just really increased volatility and having us potentially selling off right back down to where we were just only a few days ago. So the moves, as we said before, are starting to get just incredibly vicious. We basically had a 2,000 point, almost a 2,000 point down day on our local market, I think on Monday, and we followed that up with 1,000 points up, 300 points up and 650 points up. So we've gained basically everything back and some, in 3 days. So it's becoming really, really difficult to start to judge a lot of these moves. It doesn't really mean that we're going to see a full-on continuation when you see a hard turn like that, a 4% down day, and there's no follow-through. That's unusual in markets, and I think that makes things a little bit more risky at the moment. So we saw a nice follow-through out of Asia overnight on the back of Europe and then on the back of the States. So this morning, obviously, futures are opening up small, only up about 50 points at the moment, which is probably about appropriate considering where everything else is going to trade. One of the big things that we've seen over the last few sessions is some of the inflationary data out of China, the CPI and PPI numbers. PPI really came in quite deflationary, and then we see CPI basically coming in line, but it's they're very, very tame numbers that China wouldn't have dreamed of seeing probably only a year or two ago. And I think that's interesting. To me, there's a bit of a hidden piece of the market in what's going on with China at the moment that I don't think that the market's fully paying attention to. I think the market's wary of China and understanding that China is that China's economy is slowing down and that sort of thing. What I don't think that the market's really wary of, because I'm not seeing a lot of it in headlines and that sort of thing, is that debt levels in China have absolutely exploded over the last couple of years. Now, what I think, to me, which is incredibly concerning about this, and to me could be a huge potential black swan for the markets, is that typically when debt levels, when you get these huge rises in debt levels, and countries borrowing and that sort of thing, that happens. And they use that borrowing and everything to stimulate the economy after you've had a big recession, after there's been a catastrophic event or a big recession or depression or whatever you want to call it. This has happened literally to try to maintain the 7% plus growth rate. All of the investment that we've seen out of the government and that sort of thing. And to me, that's what's alarming. So we're well over 200%, and we're only starting to slow down now. I mean, how much money can they actually throw at this thing? So to me, it's something that's sitting behind the market right now that I don't think that many people are talking about. I think that that's a huge risk in the market, and if we start to see, some that to gather steam in the markets, to me that could really end up causing some sort of contagion in the future. So that's my long shot out of the box call over the next couple months. Other than that, we did see some of the follow through in the mining stocks in Asia overnight and in Australia, finally getting a little bit of reprieve and a little bit of bounce. So one thing that I also mentioned is simply that, we've seen a bit of a stabilization in the oil price in the last few days, but, a couple of the guys, that I hear mentioning, oil prices look like they're stabilizing here. For me, when you have the oil price that's just more than halved over the past, 4 or 5 months, and you only stabilize, you don't have a sharp bounce back at some point. To me, that's a shocking effort, and simply means that it's just consolidating to fall further. So I don't think that we can call a bottom in these things as of yet. Typically when you get such sharp downward moves, you get sharp bounces in there. You're going to get a really hard bounce off the bottom especially when you do reach the bottom. We haven't seen that yet over the last few sessions. So the stabilization to me is more consolidation, I think, to potentially move further lower. Like I said, if we don't bounce, if we don't bounce in the next day or two in oil, I fully expect us to take out lows and head even further lower. So watch that play over the next couple of days. That obviously can negatively impact Sasol. All right. The chart of interest today, another one from Charlie Bilello, probably the best guy out there, I think, from my point of view with some of his charts. Just has such great stuff all the time. It's showing the dollar index relative to the CRB commodity index. If you go all the way back so the dollar index is the highest since 2003. Commodities index all the way back to 2003 level. So it's almost a perfect inverse correlation between the dollar and the commodities index. And if that doesn't give you enough reason to watch the dollar as a leading indicator for commodities, then I don't know what does. All right. In terms of corporate action, we've got a handful of stocks that are going ex-div on Monday. That's RLO, OMN, OCE, and NPKs. So keep that in mind today. In terms of market data, like we said, we had the China PPI numbers that came out soft. We're looking very deflationary there, and even the CPI number is looking very benign. We haven't seen anything like that in forever there. So to me, that's also, like we said, a risk. We've got German industrial production at 9, as well as German trade balance. We've got the UK industrial production and manufacturing production numbers. We've got wholesale and unemployment rate in the States, and obviously the big daddy, which is going to be the change in non-farm payrolls. A lot of chatter around that. A couple guys have come out and called for a bit of a big miss in terms of the non-farm payrolls. I think that's the reason why they're calling that is some of the seasonal issues we have around December hiring periods and things like that, and a lot of more part-time work that's hired specifically for the season. So just keep an eye out for that today. That could be interesting, but note that if we have a total shocker in terms of being well below the expectations, that you might not get the full brunt of that in the market, because some people have been talking about that being a possibility. Okay, let's jump into the maps. The first thing that we're going to look at this morning, we're going to give you a couple I told you so's from yesterday. So one of the charts that we looked at here yesterday was BGA's. Talked about it potentially breaking out. That did break out yesterday. We've got a significantly higher target, probably up closer to 195 on the target there. Next one that we also showed yesterday as a potential breakout was Discovery above 112. It's a bit ugly, but whatever. We got a nice breakout there, and definitely looking like it has higher levels of the cards. I think we can target 120 on this move to the upside out of Discovery. There's a couple stocks that went parabolic yesterday. We had Aspen, which just really went nuts. I mean, I don't know however you want to draw that thing, but either way, it took out highs and just went totally nuts. There's a handful of stocks on our exchange. Every time they take out highs, that you just have to own them. Aspen's one of them. Another one's Naspers. When we took out the highs in Naspers the other day, I mean, you can just see the sprints that we've had over the last few sessions. You have to own these stocks when they take out highs. Pretty much, I mean, obviously it's a bullish indicator, to take out highs in any stock, but there's certain stocks that just run so hard on our exchange. Those are two of them. So watch those things. If we do get a pullback, for instance, in these stocks, they pull back to consolidate around the sort of levels. If they turn higher, one of the best places to buy them as soon as they take out highs, because they usually always give you a nice sprint from there. All right, Foschini Group. If we look here, let's shorten this up a touch, but it's been a huge bull flag here. Broke out 2 sessions ago. Didn't show it yesterday. I should have shown it yesterday because it would have been a great second day play, for the day yesterday. And I think this thing looks like we could trade all the way back up to recent highs. Trueworth's also starting to look a lot better. There's a bit of a level here around, call it 77.80. If you see there, we wicked out up around that level 78. We also topped out here 5 or 6 days, recently in Trueworth's. We just broke out through that, and to me, there's actually a little bit of an inverse head and shoulder here. It's not great, but I think the general pattern is there. You can see a little shoulder, weak shoulder, and head. Either way, the chart's looking a little bit more bullish on this thing, probably due to play a little bit of catch up and maybe has a few more bucks left in it. One more I told you so trade was from yesterday. It's ShopRite, which we showed on the inverse head and shoulder, and had broken out another huge day yesterday. Unfortunately, didn't give us that much of an opportunity to get into it, but definitely has more on the cards. Probably a pullback there would probably be a great opportunity to be able to buy. We'll look at Tiger Brands. Tiger Brands is kind of in a bit of a, call it a little wedge, little triangle pattern here. It looks ready for a move. Yesterday we came up and tested the top end of that range. I think if we can get north of 376, especially if we close above that, I think that we can break out and trade up 400 or even north of 400. So watch this one closely. If this has been another one. I mean, I think we caught a lot of guys short. There probably still are some big shorts out in there. And to me, this is a classic bullish pattern after a big breakout like that. Definitely has potential to move higher. All right, the last one that I'm going to show here. Unfortunately, this chart does not show up well. I don't know, it's obviously a thin currency feed out of this, but on the Bloomberg chart it looks a lot better. I just can't show it to you on there. There's a lot of consolidation if you see it in the Bloomberg chart around this level, which is around 179, and it's kind of the bottom end of the range. And then we also topped out several times. Sorry, not quite that high. Maybe you're down around 184. This is the Nigerian Naira, and so there's been a lot of consolidation here. You can see these little dots in here. Those, I think, are the closes. I don't know why the hell it looks so funny, but either way, the bottom line is we've just dropped. And this is a drop in the U.S. dollar, so this is obviously the Naira rallying. As we speak, the Naira is at 178.5. So we're trading in this sort of region here, which is a bit of a breakout from this range, and a hell of a big, a solid bounce from where we were only a few, a week and a half, 2 weeks ago. I mean, we traded north of 187, if I'm not mistaken, or we traded up to 187. To me, this should be bullish for MTN, simply because a big piece of their earnings come in Naira, obviously. So I think this is one to watch closely over the next couple of days. If that Naira can hang in there, this might have a little bit of a laggard feel to it. I don't know. The trade action is not right at the moment, but if the trade action does start to turn, it starts to look a little bit better. The Naira is still hanging in there. There could be a bit of a run in MTN. And that's it for today, guys. Thanks a lot.